Well, let's go ahead and bring Tom Lee in. He says the market rally has only just started. So Tom, of course, the head of research at Fundstrat, Fast Money friend. He's calling for a face ripper of a rally. Tom, good to see you. Face ripper is not a technical term. It is a term that you're using to describe what we're in. So what does that mean? What kind of rally is a face ripper rally?
I think it's a characteristic in the sense that institutions raised almost $200 billion of cash since the start of the year, so they've turned quite cautious. And they've been fading or selling their tech and growth holdings, but they've only just begun to nibble on the stocks you guys are talking about, the epicenter. And so I think there's a level of surprise coming in April because we already had a strong finish beginning Wednesday of last week. Now, it's really 3 days of strong rallies, and history shows that this is really building up to what could be a, potentially S&P 4200 before the end of the month. So something that is both really strong, but more importantly, quite a big surprise for institutions.
Tom, it's Karen. Thanks for being on, and thanks for getting it pretty much right at every single turn for the last year. Let me just ask you, though, what is the thing that it would most threaten this face ripper rally?
Well, speaking to our clients, and our team is engaged with our institutional clients almost nonstop. There's two things weighing on their minds. The first is the fact that there's the growing prevalence of mutations around COVID and the lockdowns, and it's their fear that this is going to create another wave in the U.S. and maybe set back the entire opening. And the second is really the talk that even though there's infrastructure plans underway, you're taking it out of the other hand by raising taxes. And I think both personal and corporate are big issues, but obviously, as you know, corporate taxes really seems to have some traction in Congress.
Tom, it's Tim. Sorry, my question for you is around some of the cyclical sectors I think you've talked about energy. I know you like oil services. Is this a structural call, or is this a technical call in terms of underweight dynamics and really where the rotation in this market is going?
It's a bit of both. I think what people are sort of overlooking is energy has a lot of positive characteristics. One is that there is a pretty steep decline in supply coming because there's been so little or non-existent capital investment. So production's going to slow. We have yet to see the inflection of demand coming from jet fuel, especially business travel. And when that comes on later in the year, that's going to really tighten the market. And of course, it adjusts through higher price. And that's going to raise also the umbrella around EV and battery. And as you know, as EV mandates go up, it's going to raise the umbrella for oil prices. And then for the stocks, they're almost completely unowned. Most of our clients have zero weights in energy, but energy just produced a 30% gain in the first quarter. In the history of the S&P since 1920, that's only happened 7 times, where a sector rose 30% in the first quarter, and 100% of the time, so 7 out of 7 times, that sector continued to actually rise through year end. The median is 12%. But if you take out technology in 1987, it's more like 15 to 20%. So energy might still have 20% relative performance to the S&P into year end, and that would take its total return to, potentially 70% this year. So I think there's still a lot of upside.
Tom, Karen mentioned bank earnings coming up. We're all watching those, obviously. What are you listening for in terms of, some of the commentary out of these bank CEOs?
There's a lot of important things to watch because, as you know, banks are really the other side of the ledger of the economy. So it's demand for credit, but it's also credit quality. I have a feeling a lot of these banks are going to be talking about really improving visibility and confidence among their customers. And as you know, once CEOs become confident, the next wave is mergers. So I think there is going to be a pretty big wave of mergers around the epicenter stocks. But the other sort of side of the coin for the banks is, and I think a lot of companies are going to discuss this, they have a really good idea how to rationalize their cost structure because they've had essentially 100% of their employees working from home for the past year. And while it's not going to be appropriate to necessarily reorganize the business today, in the next 2 years, every single major cyclical company and even every tech company can rationalize their operational footprint pretty dramatically. So I think that there's still a huge operating leverage story, something we've been writing about, but I think relative to street consensus on 2022, I think a lot of the cyclical groups are 40 to 100% higher on 2022 EBIT versus consensus.
Wow. Tom, the notion of a face ripper rally this month, by the end of this month, seemed to me, I don't want to say crazy. It seemed like it was going to be sort of this exhaustive move higher, like high volume, in your face. And I'm wondering what happens after, what follows a face ripping rally? Because that seems to me like that would be the last sort of burst of energy in a bull market.
Well, Melissa, there's a possibility. I think if the S&P does in fact rally strongly this month at a time when institutions are sitting on so much cash and there's so much skepticism on this market, we could see a big chase, and that could mark the high for the year. I mean, I wouldn't say that's our base case, but yes, I mean, we would have to consolidate these gains because, of course, if you look at the stock, it's going to look like, a space needle, or, another term for it, Koreans use. But yes, it would look like a space needle. And so you have to be very careful.
Needle.
Well, we'll leave it at that so as not to offend the Korean speakers out there. Tom, it's always great to see you. Thank you.
Yeah, great.
Tom Lee. Brian Kelly, what do you think about this notion of the space needle happening this month?
Well, I'm going to stick only to the space needle. That would be the stock market, and say, I think the question you ask is exactly what concerned me, right? Okay, we get this huge exhaustive rally, all the institutions in, all retail's in. Tom's talking about a face ripper rally. Now I've got the whole Reddit crowd. I've got stocks ripping higher, and then wait a second, what's next? So I do think, I'm like I said, I'm rather bullish right now, but if I'm looking on the horizons, what are the risks? I got the risk that if oil really is in a supply deficit second half of the year, that's going to have some inflationary pressures. I've got the risk that as the supply chain problems come into the economy, you get inflationary pressures. That's why you don't, in those situations, you don't want to be long the high multiple stocks, because they will get hurt in that situation. So from where I sit, relatively bullish for right now, but an awful lot of risks on the horizon, especially if you see a space needle.
Yeah, a space needle move of 120 S&P points in the next 3 weeks, Guy. Carter Braxton Worth, who will be on the show later on, often talks about the incremental buyer. And at a certain level, there is no more increment. I mean, if everybody is in, as BK had said, and all this cash comes in from the sidelines, who is that incremental buyer at that point? And that's the point where one might get concerned.
Is the Space Needle the one in Toronto, or is it in Vancouver? Where is the space?
You just
which
insulted
one is
all of
that?
Seattle. But,
Omaha.
okay, we'll leave it at that.
I don't know. I mean,
anyway.
Yeah, it's okay. I'm sure it's lovely. I'm not looking to insult people. I'm just curious as to where it is. Listen, who's the incremental buyer? The incremental buyer has been what it has been the last 5 or 6 years. This passive investing, where money flows in regardless of news, headline, earnings, pretty much anything. So I think that has been, and I think that will continue to be.
Shepard Smith here. Thanks for watching CNBC on YouTube.